Liberty Mutual, California's fourth largest insurer, plans to get out of the state's condo and rental insurance markets in 2026. Filings show that this could impact close to 170,000 properties insured through the company's Liberty Mutual and Safeco brands. This decision was announced weeks before the Southern California wildfires put the state's insurance crisis into the spotlight. Max Darrow reports.
The garden in Brian Wallace's backyard is a little slice of peace within the busy cityscape. He owns a condo in Soma, a place about as far removed from wildfire danger as one can get. Yet, like so many Californians,
it cannot get any more serious than it is now.
Wallace has felt the grips of the insurance crisis.
We were with farmers for about 20 years or so, and then they dropped us, although we never had a claim, but they dropped us.
That was last year. He says he was able to find another carrier, but then he was dropped again.
All of a sudden, you just think, okay, now what do I do?
He worked with insurance brokers in Northern and Southern California and finally was able to land another policy, though with a much higher premium, almost $2,700 more expensive than what he used to pay. And even now,
the insurance company we have now, perfectly fine, but we have no idea come June 1st of 2025 whether or not they're going to not renew us.
The paradigm has changed, leaving people like Wallace hanging in the balance.
Action has to be taken, and it has to be taken soon.
Some of the largest insurers have stopped writing new policies or pulled out of the state entirely. The latest to join the list, Liberty Mutual and its subsidiary Safeco, announcing they plan to exit the condo and rental insurance markets in 2026. However, they do plan to continue offering insurance for homeowners.
I would call it a disappointment.
Jerry Becerra is an insurance broker with over 40 years of experience.
It's the worst market that we've had in my entire career. The LA fires are going to definitely have an impact. I think it's too soon for us to know what that impact is going to be.
At the end of 2024, the state's insurance commissioner announced the final step of his so-called sustainable insurance strategy aimed at expanding coverage and bringing insurance companies back to California. Insurance companies will have to write more policies in high-risk areas, but they will be allowed to pass some of the costs of reinsurance on to customers.
In order to make the standard market come back and get insurance carriers interested in writing business in the state and being competitive, the pricing needs to go up. That's better than throwing everybody into the surplus lines market where prices are 2 and 3 and 4 times what they were paying before.
Because I know I have to spread the risk. I understand how insurance works.
Wallace says change is needed, and it is needed now.
I don't know if there can be like a special session or something like that. Have everybody, either the assembly and the state legislatures, get together and, sit down and let's get something done.
Because from his vantage point, the status quo is not sustainable.
Liberty sent us a statement saying that it's focusing on a sustainable business path, that long-term success can come from focusing its attention on Safeco auto, home, landlord, and umbrella products.